Dave Bartosiak with trending stocks at Zacks.com. What goes up must come down, and what comes down, well, it could go to zero. The stock market and gravity both teach us that. As crises come and go, there are these inverse relationships that pop up from time to time. So during the Greek crisis, it was all about the euro versus stocks. And then before this latest Russia Ukraine conflict, it was the 10-year treasury yield and stocks. And now it's all about oil and stocks. Oil goes up, stocks go down. Oil goes down, and stocks go up. That's what happened yesterday when the market shot up like a rocket while crude collapsed. Let's take a look at the chart here on crude so you can see what I mean. Here we can see crude oil, the dramatic move off of the lows, but really things cranked up here. Beginning of the year, oil just under 70. And of course, as the Russia-Ukraine situation escalated, so did the price, with crude spiking up to 130 the other day. Yesterday was an interesting day, though. Over 125 with a low all the way under 105, so 103.63. And what happened? A big 12% downside day in crude. So what did that mean for the broad market? Here we take a look, and you guys can do this if you use the interactive charts tab on Zacks.com. You can pull up whatever you like. And in this case, I'm going to pull up the Qs, and you can see yesterday almost a 4% day in the NASDAQ, 3.6% to the upside while crude was coming down. And you see the overall trajectory here to the downside. So we're seeing that inverse relationship, the battle between the old economy and the new economy. So how do we win this battle? First, let's take a look at one of the top sectors, or top industries rather, in our Zacks industry rank. In the top 3% of all 254 industries that we rank is oil and gas integrated international. So these are the big boys. They have had one heck of a run already. 28.5% return year to date, and it's early March. Spectacular moves here. And here you can see some of the names. So I wanted to just point out a few of these. Zacks ranked number one strong buys: Braxham, Chevron, ExxonMobil, Gazprom, OMV, PetroChina, Vista Oil and Gas. Of these, I'm sure all of you have heard of Chevron and ExxonMobil. So if you want a way to get back some of your bucks that you're paying at the pump, Chevron. So Chevron currently Zacks ranked number one strong buy, like I said, in that industry. Having a good day again today. This is March 10th, a Thursday. Take a look at these earnings estimates, though. It's not going to last forever. So if you look at the current year, earnings coming in at 53.87% better than last year. Of course, we did have that sort of global pandemic that shut everything down. Current year revenue growth, rather, 10.82%. Everything's supposed to sort of chill out next year, right? So 2.4% contraction in revenue, 17% contraction in EPS. So maybe the best is behind it, but look at these earnings estimate revisions that have been coming in recently. Over the course of the last 60 days, you have 8 analysts pushing to the upside for the current year, 5 for next year. So current year Zacks consensus estimates gone from 963 all the way up to 1251. Next year, 822 to 1032. So again, contraction, but still relatively large numbers there. They have a little bit of a disappointment here on their last earnings, but overall, the move been considerable to the upside. So that's what you're seeing in the old economy. Now let's take a look at some of the new economy stocks. So in this case, I'm talking the internet, software, and services industry. Now here I'm looking at Okta, which is a Zacks rank number 4 sell. And this industry in the bottom 17% of our Zacks industry rank. And I'm going to show you why. If you take a look at the detailed estimates page, that's always the best page to take a look on Zacks.com. And here you can see revenue growth is still fantastic, 37% for this year, 33% for next year. And if you look at the EPS estimates, this was a nasty year, but next year it's supposed to get a lot better. But still, the overall trajectory has been to the downside. Over the course of the last 30 days alone, 11 analysts dropping their estimates for the current year, 9 for next year. And look at what happened here. 44-cent loss to a $1.24. With next year going from 38% profit down to a 67-cent loss. That is no bueno. And that's the sort of thing you're seeing across this entire industry. So if you're looking for other stocks within the same industry, you pull up this industry analysis, which is on that quote page, and you have a couple here. You have Globant and you have VeriSign. So what do? Well, does Globant make this make more sense? Go ahead, click on this, pull this up, and see what we got. So this one is the Zacks rank #1 strong buy in this industry that everybody hates right now. Let's take a look at the detailed estimates page and see what we can gather from here now. So the revenue growth is also there, 36% the current year, 23% for next year. But look at this. They're actually making money. They're making $4.93 this year, 31% growth this year, 23% growth next year, getting up to $6.08. So those are actual growth numbers. And look at the estimates. Over the last month alone, you have 6 analysts upping the ante for the current year for next year. What's that done to the Zacks consensus estimate? Well, it's up from 456 to 493 for the current year. Next year, 568, all the way up to 608. So those are some solid numbers there. In terms of surprises, they're doing a good job managing expectations. A lot of surprises there over the course of the last 4 months. The last chart I want to leave you folks with, the price consensus and EPS surprise chart on Zacks.com. In my opinion, the strongest chart that we have available, which shows the price consensus and EPS, obviously. And on the left y-axis, you have the EPS. On the right y-axis, you have the price. The multicolored lines represent the evolution of our Zacks consensus estimates over time. Green arrows, earnings beats. So if you notice, lots of beats here for the company. Pretty good. Now, this is my favorite part. Estimates continue to move up, even for 2022 and 2023. However, price has come down. That, my friends, is the type of divergence you want to see on a chart. So if I was looking for a turnaround story in the new economy, I think I'd be looking at Globant, ticker GLOB. Every time you share this video, a hillbilly family finds oil gushing in their backyard while hunting for squirrel. Be sure to follow the author, subscribe to the YouTube channel, Twitter @Bartosiastics, and check out Zacks.com/promo for this week's promotion on stocks under 10. For everybody here at Zacks.com, I'm Dave Bartosiak.